What I have for you today is the OECD XML schema for Pillar 2. So the schema was published in July, and it's a document for public consultation, and the deadline for submitting input is 19 August. And I wanted to make this video because the schema by itself is complex. That's just the way things work with XML, right? But secondly, there are a number of surprises. And this week I want to talk about the fact that the taxpayers are going to have to chop their globe information return into multiple pieces and split it over which country gets what, which is adding a lot of, in my case, unexpected complexity to the return. And the rules on how to determine who gets what are not very clear at this stage. We definitely need a lot more. The OECD has also not published an example of what an XML file like this would look like. So we also have no idea how they would have done this if they were to do it themselves. Before we go further with this, I'll just quickly show you the table of context. So let's move on to the first slide. Before we do that, though, I just want to let you know I will be running a 1-month course in September, specifically geared towards in-house people who are doing the globe information collection and return themselves. So if you're interested, reach out to me and I'll send you more detail.
So let us look at the globe information schema. Now, if you've done the CBCR files before, you will recognize this kind of drawing which comes out of the XML schema, so you can see what goes where, right? But let us take the actual schema. As you can see, we've got the globe OECD, it's got attributes, but then we've got the message spec, which tells us what to file where in the globe body. And the message spec has got nothing spectacular. It tells you about, the sending entity 10, which country transmitters, which country receives. We know all of that from our other XML files already. What is worrisome, and what made me cry a bit, was this, the globe body, and then you see this funny 1 to infinity, right? And what the 1 to infinity means is there's not only one globe body in this return, there are multiple of them. And it goes back, we've been warned, this comes from the globe information return, the document that I published July last year about what the return is going to look like. And it said the information will be disseminated to implementing in jurisdictions under this process described in further detail below. The M&A group, that's the taxpayer, shall identify the categories in which each implementing jurisdiction where it has CEs falls, as well as the relevant sections and the data points of the globe information return, which shall be provided to each implementing jurisdiction. And that is what happens here. You see, so you're going to make as many different globe bodies as you believe there are groups of countries which receive the same type of data. And if you have got 200 companies in your group, good luck with figuring all of that out. But now there is relief. If you look at the second red block, it says the M&E group may also opt for the whole GUR to be exchanged with all implementing jurisdictions where it has CEs. Now, if you want to be purely pragmatic, just file the whole thing with everyone and get it done, right? But otherwise, if you want to only give jurisdictions information that you think they're entitled to, then you're going to have to make multiple globe bodies. And just as a reminder, if we go back to paragraph 19, it says how the information is disseminated. It's by no means clear yet, right? But it says the inclusive framework has adopted the following dissemination approach. The jurisdiction of the UPE is provided the GUR as a whole. That makes sense. Now we get to some more vague rules. Jurisdictions with taxing rights are provided with sections of the GUR that relate to the effective tax rate and the top-up tax allocation and attribution for those jurisdictions, including jurisdictions that have introduced a QDMTT. Now, this can mean two things. Either if you've got a QDMTT, you should get this information as well. But I think what it actually means is when you talk to these jurisdictions that are entitled to top-up taxes, etc., you need to include there all the countries where you don't give them any income because those countries fall out under a QDMTT regime. And then the final one is all implement jurisdictions where constituent entities are provided with general information and the corporate structure. So apparently they don't get a lot more numbers, although I do think they will get your globe income summary. We will have a look at that in a moment. You can see it a bit on the left-hand side here. You can see the filing info, the general section, and I'm not sure if they're going to get with the general section the summary or not. But that is the main body of the XML schema, and really the issue that I find worrying, but again, we should have seen it in July last year already, is this issue that we as taxpayers need to break down the return into several sub-returns depending on which jurisdiction get which part and which jurisdiction gets to see which countries, right? To do it in its most simple form, if you have a group of companies under a pope, in theory, I think you should be able to send the pope country only everything that's underneath of the pope and everything that's on top of the pope in terms of holding jurisdictions, etc., etc. But you don't have to send out any sister popes or anything like that. I think this is going to lead to us using this warning box a lot more than we did in the past, so that we can actually describe more what we think about which jurisdictions should get which part. But anyway, let's move on into further detail of the actual XML schema. So let us talk about the globe body type. And if we look at the description in the schema itself, it says you've got the message header. We basically just looked at that. That's the recipient, etc., etc. Then you've got the ID and the TIN types. And you know, everything ties to the TIN numbers, which group you belong on, where you need to pay your taxes and everything. The TIN number is almost the key for the rest of the document in terms of the calculations, right? And then you've got the globe body, which contains 5 subsections as they describe here. So we're talking about filing info, general section, summary, jurisdiction, and UTPR. And the filing info corresponds to section 1.1 and 1.2 of the globe information return. And if we look at what that looks like, this is this that you might remember from the July last year document. It's identification of the filing constituent entity and the M&E group general information, the name, the reporting year, all of that kind of stuff, the accounting information. And then the next point that we need to look at is the general section, which you can see here is the receiving jurisdictional code and the corporate structure. And the receiving jurisdictional code is where you're going to have to fill in which countries get this. That we talked about in the previous slides. This is where you're going to have to fill in, if you're in 150 countries and 120 of them get the same thing, you're going to have to put in 120 country codes in there, and then you're probably going to put the other 40 in 1 or 2 more globe body types, right? And that's going to look something like that. You're going to talk about your group structure, you talk about the UPE, then you talk about the group entities which are in the structure, and then you're going to talk about any changes, right? So you mention any excluded entities, which for most groups would not be many, and then you talk about any changes in shareholders internally, etc., etc. And once you've done with that, you come to your summary section, and I think most countries are going to receive this as well, but I might be wrong. And if we look and see what's in the summary section, then you can see it is the name, the jurisdiction, identification, the name of jurisdiction with taxing rights. So now we understand why they reference the jurisdictions with taxing rights, which comes back to these paragraphs that were read from the Global Information Return. Any safe harbors, the effective tax range, whether there's a substance-based income exclusion in there or not, point 7, your QDMTTs, and then finally your top-up tax payable. And then you come to the numbers, right? Because now you've done the group structure. So now you need to go and talk about the jurisdiction sections, and these are going to be for the countries where you're going to have some kind of tax or whether you have a constituent entity. And that corresponds to section 2, which is safe harbor. So that's what we're looking at here. And section 3, which is the calculation of your globe income. That's why I'm saying, sorry, I mean, this is most of the work, right? Because the section 3 is the thing of the globe income and your adjusted taxes and your deferred taxes and your SBIE and everything else until you come to your income inclusion rule. And once you've done all of that, you're also going to need to add the info of your undertax payment rule attributions on who gets what if everything else fails.
So let us see who gets what part of the globe information return. And here we've got a structure, we've got an ultimate parent entity in Holland, and then we've got a pope in Singapore with a sub-pope in Hong Kong, and they've got some subsidiaries. We've got a constituent entity in France, and then we've got an IPE in Switzerland with a sub-IPE and some constituent subsidiaries. So if we look at the UPE, it was quite clear the UPE gets everything. That makes sense, so we don't have to worry about anything there. Now, if we look at Pope number 1, I find the rules very unclear, and we'll have a look at them in a moment. But this is what I think one would expect to happen. the Pope would get, Singapore would get the general section. That's the corporate structure of the whole group, right? It would then get the globe summaries of Singapore, Hong Kong, Japan, and China, because those are all underneath Singapore. I'm not sure if it will get the globe summary of Holland. And the interesting thing is the text that we've just looked at doesn't mention the globe summaries at all. But you'll see if we go to the July 23 explanation of the globe information return, there's some language which implicate that this may be the case. And then one would assume they would get the jurisdictional section. So that's the detailed calculations, etc. Again, for Singapore, Hong Kong, Japan, and China. And the question is whether they would get it for Holland. And then there is the UTPR. And I think this is complicated, right? Because Singapore most likely would be one of those receiving income that will be taxed under the UTPR rule by companies that have paid Singapore base erosion payments. Now, should Singapore receive any information from those countries? As a courtesy, it might be interesting, but it doesn't involve Singapore as a tax levying entity at all. I mean, that all the other countries where UTPR is levied because they made payments to Singapore have a right to see what the Singapore income and taxes were so they know how much to levy. That makes sense. It also makes sense that they get to see each other's assets and employees and employee costs so that they can see that they get their fair share of what the UTPR is. And it might even make sense that they get to see all the POPs and the UPE above Singapore to make sure that the some part of the IIR was taxed there, which they don't tax, or that none of it was taxed, so they can levy full income tax on the UTPR. But the rules do not say anything about this at all. And then for Hong Kong Pope, it will be very much the same. It'll get the general section because everyone gets that. It'll get the summaries for Hong Kong and China, but the question is, will it also get it for Pope 1, Singapore and Holland? And then it will get the jurisdictional sections. And then the Chinese subsidiary constituent entity will get the general section, so it gets the corporate structure of the whole group. And then the question is, what else does it get? I think it will get the globe summaries for China, but nothing more than that. It will get the jurisdictional section for China, but nothing more than that. And all the other constituent entities, France, Bermuda, Germany, and Japan, would have the same. Now, if we look at Switzerland as an IPE, or intermediate parent entity, and Bermuda, they are not going to levy any income inclusion rules unless Holland doesn't apply a top-up tax. Now, the question is, does that entitle them to any documentation about Holland or about the rest of the group for that matter, right? So one would, they would get the general section. That is, again, because everyone gets that. The question is, will they get the globe summaries for Holland? And even for the others. But again, I believe there is text that says that they do get that. Will they get the jurisdictional sections because they are not levying any taxes? And then, the same story applies for the UTP attribution that I just discussed in connection with the Singapore company. Who should be getting what in that regard? To me, it is not that obvious. So there's very limited guidance in the XML schema about these questions. It simply leaves these boxes that we've seen where you fill in the list of receiving entities. Those boxes, by the way, do not exist in the July 2023 tax return yet, so they will have to be added at some level. And I want to look at what the July 2023 globe information return said in more detail. So we've already looked at paragraph 19. It says, and we're not looking at the UPA. It's very clear everyone they get everything. But the inclusive framework has adopted the follow dissemination approach. Jurisdictions with taxing rights. The question is, what is a jurisdiction with taxing rights? Are provided with sections of the GEAR that relate to the effective tax rate and top-up tax computation, allocation, and attribution for those jurisdictions. So that's everything in the calculation section, in respect of which they have taxing rights, including jurisdictions that have introduced a QDMTT, because they obviously need to judge whether those whether they do indeed need to give credits for that or not. But note that we are not talking summaries here. We're talking detailed numbers. Yeah. And even if we go a little further, paragraph 23 that now describes the jurisdictions with taxing rights in detail says jurisdictions with taxing rights under global rules are those where an M&E group is not only subject to global rules but also is required to apply the global rules in accordance with the rule order. Those jurisdictions also include QDMTT jurisdictions. I have no idea what that means. In the sense, do they then also get everything? And therefore, those jurisdictions are provided with information necessary to compute the effective tax rate and top-up tax, including its allocation and attribution among implementing jurisdictions as provided for under Article 814C for those jurisdictions in respect of which they have taxing rights. So that means not only for themselves do they get it for the jurisdictions that they can tax. So everything below them, one would assume. An implemented jurisdiction has taxing rights in respect of another where the jurisdictional top-up tax computed in respect of the latter jurisdiction will result in a top-up tax liability due. And here it comes, even if no top-up tax liability actually arises, e.g. because the effective tax rate of the latter jurisdiction is above the minimum tax rate. Now to me, that means even if you're in a safe harbor, you still need to provide this data to these jurisdictions. And I'm not quite sure if that is the intent. And then paragraph 26 says, several implementing jurisdictions may have taxing rights in respect of the same jurisdiction. For instance, where both the UPE and a partially owned parent entity are required to apply the IIR. In that case, both the UPE jurisdiction and the POPE jurisdiction has taxing rights and an offsetting mechanism applies. Yeah. Equally, UTPR jurisdictions would all have taxing rights in respect of the jurisdictions for which the top-up tax is not reduced to zero under Article 2.5, even if no top-up tax actually arises in respect of those jurisdictions. So again, even if you have companies receiving payments from under-tax payment jurisdictions and they are paying more than 15% tax, does that mean that they nonetheless should get the information on the taxes of those jurisdictions to whom they've made the payments? It would seem fair to say that they should, because otherwise they don't know whether those taxes have been paid or not. But that opens a filing obligation, which is much wider than just down the corporate chain, right? Because you can, in our previous example, you can have a company under the IPE structure making a payment to the Pope structure and then being entitled to all the information about the Pope structure. And the same kind of uncertainties exist with regard to constituent entities, might even be more. Because again, the inclusive framework, paragraph 19, we've looked at before, has adopted the following dissemination approach, and then all implementing jurisdictions where constituent entities of a group are located are provided with general information and the corporate structure, which covers all the data points necessary to verify whether they have any taxing rights. Right now, there are two issues here. The one is, so even if you just are a constituent entity, you get the whole group structure. Fine, that is okay. I mean, you already got the country by country report as well. Now you at least know where the boxes fit. But the interesting thing here is it's only if you're an implementing jurisdiction. The inclusive framework has not made a decision apparently yet about what happens if you're not an implementing jurisdiction. So you may not only have to split this between popes and IPEs and constituent entities, but you also need to make a separate category for non-implementing jurisdictions. And then one would assume that would be jurisdictions that are not implementing in the sense that the OECD has determined that they are not qualifying implementing jurisdictions. And it is unclear at this stage what happens to those, whether you need to put them on a separate list as well or not. And then the text goes on. All implementing jurisdictions where the M&E has CEs need to assess whether the M&E group is required to apply the rules and verify whether they would have been the only jurisdiction with taxing rights. Therefore, in addition to the general information relating to the identification of the M&E group and the reporting fiscal year, the corporate structure is provided to every implementing jurisdiction. So it's very clear they get the corporate structure. The corporate structure provides information on the ownership structure of each constituent entity. This information allows every implementing jurisdiction to assess whether they have taxing rights in respect of every CE and member of a joint venture of an M&E group. Jurisdictions with taxing rights in respect of another jurisdiction will use the corporate structure not only to assess whether they have rights, but also in order to verify the application of the jurisdictional blending and allocation of income. And again, I don't know what that last sentence means, because I think if you want to be able to verify the application of the jurisdictional blending and allocation of income, you might see some numbers, from some other jurisdictions. But again, I don't know. And then here we come to something which I think might look like access to summaries, and then it might mean that every constituent entity jurisdiction gets all the summaries, because it says, in addition to the general information relating to the identification of M&A groups and the corporate structure, all implementing jurisdictions where the M&A group has CEs are also provided with high-level information designed to provide an overview of the application of the GLOBE rules in respect of the M&A group. Not only that part that they are a part of, but the whole group. And to me, high-level sounds like summary. So I'm not sure whether the constituent entity jurisdictions indeed all get the summaries, but it seems, based on this paragraph, which is a year older than the XML schema, that that might be the case. We definitely need more guidance from the OECD on this matter. I hope you enjoyed this video. Next time, we will look into more detail into the separate boxes under the XML schema, and then we'll see how they relate to the boxes under the Pillar 2 return that we were confronted with July last year. Bye for now.